Welcome back. Well, the markets have come off a little bit from the top, and IT stocks in particular, they're under some pressure. But let's focus on another deal that was announced late last evening. JB Chemicals and Pharmaceuticals, they'll be acquiring Glenmark Pharma's cardiac franchise, that's Razel, for around 314 crores. To discuss the rationale of this particular acquisition and understand more about it, we're joined by Mr. Nikhil Chopra, the Chief Executive Officer and whole-time Director at JB Chemicals. Hi, Nikhil. Morning. Always good speaking to you. Give us a couple of details then about this. If you could tell us what are the margins that are enjoyed on this? Is there any synergy benefits? And also, what is the growth outlook for this business? I think it's been annualizing around 60-65 crores odd. Go ahead.
Yeah. Good morning, Najar and Prashant and Sonia. And first of all, wishing you all belated 23rd anniversary to CNBC and all you at your team. And talking more about the deal, this is more in terms of the guidance that we have been giving in terms of how we want to improve our presence in chronic therapy. So we have bought this brand Razel, which is rosuvastatin and combinations for India and Nepal market at a price of 314 crores. And the revenue is around 60 crores, which is low single digit growing as is. And the gross margins are healthy, 80% plus. That is where we stand. And talking about the synergy, we already have a team of 200 people who promote chronic products, chronic portfolio. So this will be a part of the priority 1 or priority 2 product promotion. And we will add around 50 more people that will help us in terms of how do we derive better EBITDA margins for this portfolio. Overall, what it does to our presence in the world of cardiology is in 2020, we were 13th ranked company in a 23,000 crore market, cardiology. With what we acquired Azmada, we became 11th ranked company, and now with the Razel coming in, we are now 8th ranked company. So we are only gaining ranks, gaining market share, and we are talking of a potential of 2,500 crore market, which we see growing at low to mid teens, low double digit to mid teens in the coming time.
Okay, so you said 80% plus gross margins is what you're sitting on with this business, right?
Yes.
Okay,
yes.
Got that. And a 2,500 crore market. Just want to understand what is the opportunity size from here on. Currently, it's at about 2,500 crores. What could the growth be? And how much could it contribute to your own business, say, over the next 1 to 2 years?
So, more than talking of 1 to 2 years, let me talk of what we see this as an opportunity. This market is growing at low single digit, rosuvastatin and combinations. And for us, with 2.5 to 3% market share in 2,500 crore market, we are looking at in next 3 to 4 years. Why don't we double our revenue? That is what is the opportunity for us going ahead, because it strengthens overall our presence, being the leader. What we have demonstrated over last 2-3 decades in the world of hypertension with Cilacar, and now with the heart failure pill, sacubitril valsartan, which we acquired, and now with this coming in, it cements our place. And it gives us huge opportunity in terms of how we can gain market share and improve our presence and serve more and more patients in the world of chronic diseases in the country, as being the burden being so high.
Will you be adding to your debt? How did you fund this particular acquisition? And since you're saying that you're looking to sort of grow within this space, any more acquisitions, will you be looking to take on some debt?
So we have taken long-term debt. I think 70-80% is been funded with the help of debt, and the rest will be the cash debt will be generating will help us in terms of how we can fund this. And Sonia will continue to scan the opportunities available in Indian market because we are rightly poised, being a focused company, particularly in cardiology, antibiotics. That is where we stand, GI portfolio. So we will look at if there is any opportunity which comes across and which is EBITDA accretive. If you look at what we have done with Razel, though we are paying 4 to 5 times the top line, but EV to EBITDA is 9 to 10 times, which overall helps us in terms of being EBITDA accretive in overall the journey that we want to travel.
Just a couple of questions, Nikhil. One, you said 2,500 crores is the size of this market.
Of rosuvastatin.
Which is blood thinners. This is blood thinners, right?
Yes.
Okay, so this is this.
No, not, but it is lipid lowering agents.
Lipid lowering agent, and this segment is 2,500 crores.
Yes.
And Razel has a market share of, in that it has a market share of
2.5%, 3%.
2.5%, 3%. You also mentioned a 8% share. What was that? That was in what?
No, 8% I did not.
Okay, I think you said you're at 8th ranked now.
That was, yeah, in what I was talking, overall, if you look at cardiology market.
Okay, got it.
Which is today in India, 23,000 crore. From 13th rank, today we are 8th rank.
8th rank, got it. Now, you said there are 200, these are field agents who come along with this portfolio, who will push this, right?
No, 200 already, the field agents which we have, where we will be placing this product. And we will add 50 more people, which overall helps us in terms of having better reach and having good share of voice.
Why were they, could you tell us, I know we should put this to Glenmark, but why was this, what is the reason to sell this particular portfolio? I mean, if you can tell us from your perspective, and will you have to do a lot more to penetrate and push this drug into the market?
This would be a good question for Glenmark. I will reserve my comments.
Okay.
So, for your business, right, JB Pharma, if you look at the operational performance, the India business now constitutes about 2/3 of the EBITDA. Are you planning to take it higher from here? And will this be through the inorganic route? Anything that you have perhaps identified?
So, Sonia, what we have done in last, if you look at in last 2 years, there are 3 big levers if I have to talk about India business. One is the entire concept of making big brands bigger, which we have demonstrated in last 8 quarters. All the big brands continue to grow, gain market share. Second, what we have done, we have got into some new category of products, done organic new launches. That is what we have come into in the field of respiratory, in the world of pediatrics, in the world of cardiology. That is what we have done. And third, this is a 4th deal that we have bought on the table in terms of starting with Senzyme that we acquired. Second is we bought this product Asmada, and third is the portfolio that we acquired from Reddy's, and 4th being Razel. So all these 3 put together is helping us to fuel our overall growth trajectory in India business. Also, just to share, from 23rd rank company, now we are 22nd rank company before the Razel deal for the month of November IMS as reported. And we continue to be the fastest growing company. We grew at 31% as compared to market growth of 16-17%. So these all 3-4 levers are helping us in terms of serving more and more number of patients, meeting more and more number of healthcare professionals, and be right to our entire guiding principle in terms of what more we can do with the right drugs that we manufacture in India for Indian population.
All right, Nikhil, you gave us a gross margins. What is the EBITDA margins out here? If you could tell us, and are there any synergy benefits as well? That's the first part of this acquired business. And when can it hit 100 crores? Maybe 2026? Do you think this particular product can contribute around 100 crores?
60 crores already. We are looking at, if the initial transition phase, we are looking at to grow at a low double digit, and probably then we want to see the trajectory going from 14 to 15%. So 26, 27, we should be close to 100 crores. That should help us.
Okay.
Overall, from a synergy perspective, Niger, what I shared earlier also, if you look at the entire journey in the space of chronic space, which we have been guiding, it only helps us to improve our contribution within India business, now coming to 60%. And we are already with this team of 200 people, and we'll be adding 50 more people. We are already covering around 20,000 MD medicines and around 5,000 to 6,000 cardiologists who are the prime prescriber for statin therapy. So overall, it helps us in terms of widening our portfolio, getting more prescriptions from the healthcare professionals, and whatever A&P spends we are doing, it helps us to get the right product from the doctor community.
EBITDA margin I missed out, sir.
EBITDA margins are upward north, 55-60%. 55 to
60%. All right. I was trying to get that. I was wondering why you were waiting it. But thanks so much, Nikhil. You've given us a fair bit of details on this acquisition.
Okay, yes. And in fact, all the best for the future as well. You're looking to improve your presence in chronic therapy, in cardiology, and looking to double their revenue in the cardiac market.
All the talk of this cardiac drugs and statins and lipid lowering, it's giving me.
I was just going to say, hopefully we'll never have to be clients of theirs, right? I mean, use these products.
I hope. While we wish you all the luck with the business, Nikhil, we hope our viewers and of course you, all of us, stay healthy. But
it's healthy, fit, and fine.
Absolutely.
But it just goes to show, right, what kind of market that we're looking at, 2,500 crores. And I mean, cardiac issues, I remember Ekta had put out a piece where she said that India, the highest amount of deaths are due to, cardiac issues.
Lifestyle issues.
Lifestyle issues, absolutely.
Absolutely. Big one.